say, I assume people are going to listen to this recording today, right? So, you know, let's say the IFO survey in Germany, sentiment survey, which is known to have a good correlation in impacting the market in the euro. Let's say it came in stronger than expected. So what I would say, before the trade, before the releases are coming, if I see something obvious in the technicals that I mentioned, if I'm looking for that obviousness or that clarity that I'm looking for, if I get it, then I would go in, and I would go in and I would go with the trade, but I would be cautious as to what the fundamental is going to be, the fundamental release, whether it's the IFO, whether it's the non-farm, the payroll, whether it is the big announcement from the Eurozone. But, it is very important. Sometimes when you trade something as big as the euro, sometimes a positive number could be counterintuition, right? You
Yeah.
remember when Jean-Claude Trichet with the ECB, when basically everybody was looking for him to say strong vigilance, and everybody and their brother who started trading yesterday, they were told that, oh, if he says a strong vigilance, that would be positive for the euro. Well, guess what? The euro went up for 3 minutes after he said that, and it came down. Why? Is it because a strong vigilance on inflation is useless? No, because he also made it
Okay.
sound that they were not committed to further rate hike. So it's very, very important to know these details, and that's why oftentimes the technical will supersede the fundamental.
Okay, but what you're
But
actually
what
talking about is not just the fundamentals, but it's people's expectations of the fundamentals and how they're likely to react given their
and
expectations
perception
and
and perception.
given the market position. I mean, it's what I would call game
Absolutely,
theory, but it's
absolutely.
essentially that. So you have the technicals, you have the fundamentals that give you the background, what you're expecting, but then most importantly, because at the end of the day it's the flow of money that counts, is how people are positioned and are likely to react to what the market's doing, is what you're saying.
Yes, and that's why what I advise people is that yes, one thing is that you got to hone your understanding of the fundamentals, but it's not the end all be all. It's you have to be confident with your own technicals, with the surround yourself, hold yourself with the 4 hour chart, with the daily chart, and probably not well maybe with the weekly chart if you need to see whether the oscillators are agreeing because sometimes they disagree. Sometimes the oscillators could be very positive in a 4 hour chart, in the daily chart, but then they stop. They are becoming very negative or flat in the weekly chart. And you have to know where to stop, where the buck stops, or where the euro stops.
Okay,
So that's what's important.
I'm gonna put you on the spot here. IFO, looking at euros dollars 144.15. Are you going to take a trade in for later today, or
I
how are
think
you going to react on IFO?
well, okay, the iPhone did come in, but now I'm looking at the chart, and I am the big fundamental number right now. Though it's not a number, but it's the announcement of the eurozone. And what is the announcement regarding the Greek debt and regarding the making the EFSF, that big fund for the eurozone, more flexible? What does that mean? That announcement? Well, we started getting some interesting filters here from the news on Thursday that the French and the Germans are are going to push the the Commission to basically to make the EFSF fund more flexible. In simple English, what does that mean? It's something that I've been saying on TV for the past 2 months now. When I go on TV or when I write my analysis, my premium analysis here that goes on ashraflighty.com, I say,
Has to get
listen,
the
guys,
plug-in.
of course we have to do the plug-in. What do you think here? So who's paying the bills? She is or he is? So here's the thing. So, you can philosophize all you want about the fiscal rectitude and the lack of, and how the Southern Europeans are lazy and they like to spend money and they don't like to work hard at making it, and how the euro should get out of this and that. But you can take that conversation in a coffee shop and try to sound smart, or in a cocktail party. But when you try to go and make the trade, what matters is what the price action, not how smart you sound to some people about debt and about GDP. Not only because I could get into another conversation and tell you, well, what about that other country called the United States?
Okay.
So don't get me started. And what's going on with Congress? It would have been unthinkable
So
8 months ago.
So is
for
it
Moody's to come out.
okay?
Hold on.
Let's get back to that euro dollar. It's still
Hold on,
144.
hold on. It would have been unthinkable for Moody's to come on and say, we're going to downgrade the U.S. rating. So going back to the technical and to the fundamental, yes, what is the fundamental picture that could get you to agree with the technical picture that you have found, or that could stand in the way? And that's what's important. But you have to have gotten a clear enough signal about the technicals. All right? Because sometimes you can say you got a good positive signal in, let's say, dollar yen. Okay? The dollar yen is pushing higher, let's say. And then you get a bad number in payrolls. But then you and me can have a 20-minute conversation. What does a bad number in payrolls mean? Are we only looking at the NFP? Or are we looking at the unemployment rate? Or are we comparing it to the expectations? Or are we looking at the revisions? Or are we looking at the average hourly earnings?
Okay, let's bring it back. Let me put it this way. Euro dollar drops from 144.15. I'm going to be buying 143.30. Are you going to join me?
143.30, yes. I was looking at, yeah. Well, actually, it's very interesting that you mentioned this, because I'll tell you where to buy. I actually have two buys in here. This is something unusual which I did. I have two trades that I issued yesterday.
Okay.
Buy at a higher level, limit and stop, and buy at a lower level and a limit and stop. And
because that's basically because you want to be long, full stop.
Well, yes. And sometimes what I do, I put a long, I put a limit and a stop, and then I'll put, when we hit our target of a long target, then I'll put a sell. But here, what did you ask me? A 143.30?
Yeah.
Yeah. Well, I have my lower long is a 143.40.
Okay.
Even though we are talking right now and the market is a 144.14, but I have a higher long, which I wrote last night, which actually here in my premium product, which was issued actually at 11:15 British time PM Thursday. That is 10:15 GMT. That is 6:15 PM Thursday. Because people are asking me, make sure you tell us when you wrote those trades, when you put those trades, when you wrote that analysis. Yeah, I have one at 143.80.
Okay.
And here's what I do, Ed. If you say, where do you buy? Well, I don't say you only buy here, because you write something, it's issued, and then when people get it, well, but the market is off. Where are we? So I put a range. I put a range of an entry range of 40 pip range. Okay?
Yeah.
30 to 40 pip range. I put a limit of a 40 pip or a 50 pip range, depending on the entry. And the stop,
and the risk return. Do you use risk return criteria?
I try to, yeah. Well, I try to make it anywhere between 2 and 3. Or sometimes, if I'm really so sure about where it's going, I don't have to worry so much about the stop. I make it anywhere between 1.5 and 2.
Okay.
Okay.
Cool.
I'm flexible.
Ashraf, we're running out of time. We could go on all day. But it's been great speaking to you. As usual, a lot of insights. As usual, huge eloquence. Let's catch up for a beer later. But it's been great speaking to you, my friend.
Thank you very much, Ed. Thanks for having me, and looking forward to chat. And if you want to do this one more time, a part 2 or part 16, we'll do it.
Okay. Look after yourself. Cheers. Bye.